Welcome to your premium version of In It to Win It. Thank you for being here. We are back with fan favorite Lobo Tiggre. Lobo, thank you for coming back on the show.
You keep saying that fan favorite thing. I hope it's true.
Oh, it is. When we look at the analytics, it's you, Rick Rule, Adrian Day, and Michael Oliver. You guys are competing for the top spots. It's great. So love having you out here.
Good company, good company.
Yes, yes. Thank you for doing it. Okay, Derek has a question on gold, so we're going to go to the gold chart here. Let me be Johnny on the spot and pull it up. And sanity check. You can see the gold chart.
I can now, yes.
Okay, there we go. All right, massive selling today. So it's lucky that we got you on today. You've been pounding the table that it's probably time to be taking some profits here, and this giant red bar is kind of good to see from that perspective. He's asking about key levels of support here. So he mentioned 2,300, 3,500. What do you see as far as like the next floor or
Yeah,
some
let me
levels?
just jump in. I'm not a TA. I'm not the one to ask about this. There are free YouTubes from Christopher Mullen, who I think does a pretty good job. And you mentioned Mike Oliver; they would be better. I'm not a TA. Look at those lines there. That would be my best guesses. But things don't always work out the way the lines on the charts tell us to. All I can say as a fundamentalist is I remain bullish. But anytime there's a hockey stick, you know, it doesn't hurt to put in whatever mechanism you have, whether it's my upside maximizer or something else, to make sure that your hard-fought gains don't slip through your fingers.
Okay, what would be your so there's no real price point that you have of like, hey, I'm going to be interested in gold if it gets to 3,000 again, or
No, suppose this triggers. There's a lot of Johnny come latelys. All the fundamentals, all the reasons to be bullish, none of that can change. But if just Mr. Market's that little silicon switch in his head flips, and he wants to shoot them all down, he's gonna.
yeah.
And selling begets selling, stops get triggered, somebody's cascade triggers somebody else's. From where we are, well over $4,000 an ounce, gold could drop $1,000 an ounce, $1,000 an ounce, and still be at a level that is fantastic for the actual business of mining the stuff. But if that happened, what do you think would happen to the stocks? They would get absolutely creamed. And so, I don't care about the support levels or whatever. I would just look for stupid cheap. We talked about that in the free segment. At some point, I don't need to know what's going to happen next. I just need to know that something is on sale stupid cheap.
Okay, okay. And here, moving over to silver, had a nice sell-off right here, all the way up to $54. And then today we're sitting at 47, 48 bucks. What are our average kind of worldwide all-in sustaining cost for gold miners and average all-in sustaining cost for silver miners?
Well, remember, the prices, or I think of gold and silver as money. So I think of them as exchange rates. The gold dollar exchange rate and for silver are not determined by mine supply and demand. And we have seen prices or exchange rates drop below the cost of production and stay there because it doesn't matter. There's above ground supplies and silver is a byproduct anyway, right? And we've seen them go way above, like right now, 4,000. The average gold mine out there right now in production now was built assuming, depending on the producer, between $1,500 and $1,800 an ounce. Like we're more than 2x that.
Yeah.
Which is why my previous comment, it could drop $1,000 an ounce and it wouldn't matter to the business. It would. Their margins wouldn't be as fat as they are now, but they'd still be very fat. So these fluctuations, they just don't matter to that. And the actual cost of production has never been a predictive factor on what the exchange rate is or the price is. It just doesn't happen that way. Real rates and the dollar and all that, those have been the bigger drivers for monetary metals with some reason, not the cost of production. So I'm not saying I don't look at that. I want a profitable producer if it's going to be, if I'm going to invest in it, or if it's a project that's going to be built, I want to be confident that it's going to be profitable. So yes, it matters. But it doesn't determine the price of the metals themselves or where they're going to go. Completely different things.
Okay. Okay.
Oh, sorry. One more thing with the silver, though.
Mhm.
Uh, Silver and gold are money. Silver tracks gold. And this year it's been tracking gold more than copper, which is a good thing because last year it was tracking copper more than gold. But there is uh, a singular instance in the silver or something unique to the silver thing, and that's the London squeeze. Like
Oh, yeah.
the shortage of physical silver in London, it's not the same with gold. It is specific to silver. And that makes silver more prone to correction than gold right now, like specifically right now, if London is fixing that problem. Like I don't think this red bar in your chart is due to that. Obviously, gold is moving, other things are doing. By the way, the dollar is up bigly today as well. So it's no surprise to see monetary metals retreat on a day where the dollar is up notably like that.
Yeah.
Um, but there is also this London physical squeeze going on in silver right now. And if or when that does reverse, then the extra oomph that silver has gotten recently can be reasonably expected to go away. Now, that doesn't mean I'm turning bearish. I'm not selling all my silver. I'm just saying the extra upside that silver has gotten from that squeeze makes it revert to trend before that when that gets resolved.
Okay.
And the trend was upward.
Okay. Yeah, here's a spread chart I came up with uh, the backwardation and contango. Basically, below the white line here is backwardation, above it is contango. And it's kind of interesting. We've gotten pretty skewed right here. I mean, we haven't seen at least dollar amount backwardation like that since the 1980s. So it's kind of cool. Neat little.
Yeah, that's a big deal. And that can't stay forever. I mean, your Uber silver bulls will say, oh, the mines aren't producing enough. This is it. Silver's going to the moon. Maybe they're right. But experience suggests that it's prudent to not bet the farm on that.
Okay. Okay. Levintic wants to know what commodity do you think is going to be the next one after gold and silver? Which one are where's the next tsunami of money
I
going?
was I was already, I got uranium right in 23. I got gold right in 24. I said gold for 25. And right now it looks like I was wrong. Silver and gold are both trouncing copper so far, but copper has hit an all-time high this year. And if this correction in gold and silver takes back a lot of our gains this year, I might actually be right about copper in the end, in the final reel. We'll see. But I'm still very bullish on copper going forward. I'm bullish on silver and gold as well. But they run up so much that higher copper prices are an easier ask at this point than higher gold and silver exchange rates.
Yeah. Okay. All right. So sounds like you're saying copper's probably the next one.
I'm standing by copper.
Okay. Awesome. Got that one there, Lev. And bonus question. You alluded to this on YouTube, but I just can't help but see. We're going back to oil here. Basically, what's your gut feeling on this? What will the prices have to go higher because of a systemic lack of investment in the industry, or are we in a deflationary doom loop? I'm kind of torn here because I'm like, okay, this is getting pretty cheap. The companies are paying real nice dividends, so you get rent along the way if we're wrong and it gets cheaper. But I don't know. Oil's kind of a economic slowdown indicator. Usually it doesn't do great when the economy's slowing down.
Right. So my concerns about Trump shock say, that's a reason not to expect oil to recover anytime soon. And yes, I agree with Rick Rule is the one who always pounds the table about the underinvestment in the sector. Eventually, those chickens have to come home to roost. But Rick Rule himself will say, never confuse the inevitable with the imminent. And there's nothing in this chart that tells me this is imminent. And then I look at the real world. So for whatever reason, without oil prices going higher, OPEC decided to quadruple the rate at which it's increasing its, it had voluntary supply constraints and it was slowly easing up on them. And then they 4x'd the rate at which they were ramping that production back up again, while prices were down, not high. So that alone, just whatever the reason for that is, that's not a bullish sign for this market. Now, some people are saying, well, they're trying to put the shale companies out of business and secure market share and tighten the screws afterwards. Fine. If that's true, the shale guys aren't out of business yet. So that's not going to change until after that. If that's true, you will see the buy signal as the capitulation happens from the US producers. It could also be that when who knows what happened behind closed doors when Trump went to the Middle East. And maybe, this is part of the deal here where he's got these guys pumping like crazy to try to bring Russia to the negotiation table, because Trump, he made a big thing about I can end this war in 24 hours. And here we are, what is it, 6, 7, 8 months? What is it,
Almost a year.
Well, from the promise or from his taking office. But anyway, I suspect that Trump would really, really like to see this war end, put another feather in his cap, and oil is maybe the most potent lever that anybody has on Russia. So if that's the case, then there's another visible trigger. Like, it's not going to change until the war ends. I'm not saying I know this. I'm just saying if that's the reason, it doesn't change until the war ends. So there's no reason to be buying until the war ends. It could be a combination. It could be other things. I don't pretend to have secret sources in the CIA who tell me anything. I'm just a participant in the market like you guys. And so as far as I'm concerned, I'm just not interested in trying to catch a falling knife right now. That's as far as I go.
Okay. All right. And wrapping up here, we've got platinum and palladium. Man, these have had some really nice drawdowns today, just like gold and silver.
Interesting use of the word "nice," my friend.
Maybe I picked that up from Rick. It's like I get excited when I see sales. You know what I mean? It gets me going. 7% on platinum at this moment. What is that? 6% on palladium. Macro thoughts on platinum, palladium. You putting any money to work in these yet?
No.
What do you think?
No, they're industrial metals. The other expensive silvery metals are not monetary metals. They can echo what happens with gold and silver, but if you step back to the broader picture, the little intraday wiggles don't carry over longer periods of time. That's why platinum has been less expensive than gold for more than a decade, I think pushing 15 years, despite the fact that it's more rare in the Earth's crust, which again tells you that rarity alone does not determine price. So my view is, and I can't prove this, but for whatever it's worth, my take is gold is like screaming north of all-time highs, even adjusted by CPI. So, and people are excited and they're buying into the thesis. It's really funny to hear the debasement trade is now a thing on Wall Street. Like, we gold bugs have been talking about it since 1970s.
Yeah.
But now the debasement trade has become, a buzzword and people are piling in. But it's hard for anybody, a disciplined trader, even short-term trader, to buy an all-time high. So you buy the idea, you buy the debasement trade, gold's at an all-time high. Well, what isn't? Well, silver and platinum and palladium weren't. So in my view, this is a guess, but is my guess, is that the other precious metals that were still relatively cheap got a bid just because people wanted to buy gold, but couldn't bring themselves to chase all-time highs.
Oh.
And so if that's the case, that's not a very durable case.
Yeah.
Either they go up and they're no longer bargains and it stops, or the monetary metals roll over and your reason for chasing the cheaper ones, they're not the same thing. So, if the thing that you actually want starts going on sale, there's less reason to buy the substitute.
Yeah. That's a really good point. I had a platinum expert on the show, I don't know, a few weeks ago, and he was mentioning that China was doing a lot of platinum buying. And his surmise of that after going to the platinum conference out there was that they were like, yeah, well, gold's 4,000 and this is 1,100. What are we going to do? Sometimes it's as simple as that. Okay, wrapping up. Here is a commodity that I believe is still hated. This is the nickel chart. Looks like, as Rick would put it, the EKG of a corpse. Macro thoughts on nickel?
It's an industrial metal. There was a lot of hype about nickel and the electric cars, and that has gone into reverse. It ultimately, nickel never goes to zero. I mean, it's not quite copper, but it's up there. It's like that. It goes in stainless steel, many other uses where somebody's going to make money delivering nickel to the market, no matter what, at some point. But with the economy going the way it is, and with the electric car batteries now getting rid of the cobalt and the nickel as fast as they can, the Chinese in particular, where half the cars sold are electric now, are moving away big time from the nickel cadmium, nickel cobalt manganese batteries. So yeah, what I'm saying is at some point Rick will be right. Maybe this is the bottom and buying hate now makes sense. But I'd like to, I'm not willing to do that and then maybe have to wait 2, 3, 4, 5 years for that. Rick could do that because right now he has a retiree. He has one client, Rick Rule. And Rick Rule doesn't complain to Rick Rule so much. Whereas if I start saying, yeah, nickel's headed, let's buy nickel, and nothing happens for 2, 3, 4 years, that's for a mere scum of the earth newsletter writer like me, that's bad news. So I wouldn't personally buy it now. I'm not going to go there in the newsletter, but at some point, sure, I expect to be a nickel bull at some point in the future, and nothing to do with electric cars or whatever, but just because it is, a foundational industrial mineral.
Okay. All righty. Awesome. Thank you, Lobo. We'll put all your links down below. Any final thoughts?
Nope. Not really. I've said it, nobody goes broke taking profits. I don't know when markets are going to top or bottom, but if you have a method, right? You have a method that works and you stick with it over time, I think that's superior than, chasing after momentum and hoping to get lucky.
Okay. Awesome. Thank you very much. You have a great rest of the day, sir.
Thank you. You too.